Oops, where'd that go? Okay, so welcome everybody. Thank you for coming tonight. Just as an FYI, I think you've all heard, but we are recording this. So just so everybody knows, we'll potentially be putting this up on Shrewsbury's YouTube page for later. Other than that, I can turn things over to Dan Karr, who is the CEO and founder of ValChoice, a great little utility for navigating the insurance industry. And I'm going to disappear, so take it away, Dan.
Great, Mike. Thank you. I appreciate the opportunity to talk with people here from the Shrewsbury Library. I'm going to start, and by the way, you all may have heard this as Mike and I were chatting there beforehand, but feel free to just unmute and ask questions as we go. It's going to be very interactive. We can kind of tailor it to any particular questions you may have. But besides that, I want to start with why do I do this? Why does ValChoice focus on insurance? You probably see at the bottom of my screen here, we do not sell insurance. And so one of the things that's very unique about us, unlike most of the industry, is we don't get paid on commissions. We don't have any incentive for you to buy anything in particular or to change or to take any kind of action at all. So that's not typical. The reason I founded this company, which is now 7 years old, is some number of years ago, I was living in California at the time, and I was hit by a car, and I was hurt pretty badly. In the end, because my medical bills were so large, and really that was the only reason, my health insurance refused to pay the medical bills. The insurance company, the driver that hit me was 100% at fault, refused until the statute of limitations, which was up, which was 2 years later. And then they paid out a small policy amount that didn't cover the bills. And then my own underinsured motorist also refused to pay. It was shocking to me. I actually didn't really believe something like that could happen. So I ended up having to pay them myself and then fight for years to recover the money. Literally, the financial recovery took much longer than the physical recovery, which also took a long time. But in the end, I decided, I have a technical background, I have a mathematics background. I'm going to use this as a way to bring transparency to an industry that's very opaque, so that what happened to me never happens to anybody else. And this is truly a mission-oriented company focused on just that, helping people understand insurance in ways that are both interesting and easy to understand. And then I got connected with libraries by participating in some social venture innovation events that they have up at the University of New Hampshire. And I met some people around UNH as part of it, including a business reference librarian that said, Dan, every public library in the country needs the content you have. And I thought, wow, what a great way to get this content out there, because it's really hard to get it found on the web when you have these large insurance companies spending literally billions of dollars a year each on advertising and really kind of consuming the airwaves and the eyeballs of people. So I thought this is a great way to start to share information. So we now provide all the content you're going to see to any library in the country for free, so that patrons can have access to it. So that's what we're all about. So that's just kind of an overview. You've been watching the front page of our website cycle through different interesting, or hopefully interesting, blog posts while we talk. But where we're going to go with this is we're going to start with car insurance, and actually the car insurance calculator. The car insurance calculator is something that we built so that people could kind of take control of their insurance. They could understand how it gets priced, which means you can understand how you can help control that price, and also figure out, am I getting a fair price? A lot of times when a company decides that they may not want a certain type of customer, they don't actually tell them we're going to drop you. They'll just raise the price. And so it can be hard to figure out sometimes, is what I'm paying fair? Should it be different? And everybody here's from Massachusetts. I'm going to go to the Massachusetts state. Feel free to work along with us as we do this, so that we can be doing it together and you can look at your exact situation. So if you want to do that, you can see this URL up here, valchoice.com/car-insurance/Massachusetts. So whether you want to do that now while we're talking, or do it later, whatever works best for you. So what I'm going to do here is basically just simulate being like a two-car family and show you how this works with actually a focus on how things are changing or have changed because of the pandemic. There's a lot of people that are likely overpaying for their insurance because they're not using their cars anymore. And so I'm going to show you how to figure that out. And in the process, you're going to learn quite a bit about car insurance as we go. So I'll start by just putting in my name. And I just realized I don't know off the top of my head a Massachusetts zip code. Can somebody just type like the zip code of your area? Because I need, this will reconfigure to, this configures to,
01545.
sorry, say that again, please.
01545.
Perfect, thank you. Yeah, so we actually break the country down with this calculator into hundreds of thousands of territories, and we can really narrow it down to exactly where you are. Okay, so in that particular zip code out in your area, the average that a person would pay in Massachusetts is $713 for liability insurance, $467 for collision, $159 for comprehensive, and $40 for personal injury. So those are kind of the starting points. And now we're going to modify that based on various data. So let's say a 45-year-old person that started driving at 16, let's say male and married. So we'll do like a family. So now you can see that those numbers have gone up a little bit because males are a little bit more expensive. They're higher risk drivers. If it were single, it would go up again. So you can see all the different scenarios of how it works. Now, driving record has a big impact, and depending on it depends on what happens. Sometimes it's a very big impact. Sometimes there's hardly any impact. And this is, when it comes to driving record, what we've seen, we've gone through data, unbelievable amounts of data across all the states. Typically, with one incident, unless it's something really severe, most companies are going to say, that's fine, we'll continue to work with you, your rate may not even go up. But once you have two incidents, so let's say you have an accident that was your fault that had bodily injuries, and let's say you had another accident that didn't have bodily injuries, but it was also your fault. Once you get to two things, or maybe that second item is, maybe it's a ticket, maybe it's a speeding ticket, about 1 out of 5 carriers don't really want that customer anymore. They really would rather have somebody else. And so this is kind of the first scenario that we see, where if your price starts to go up a lot more than what you're seeing up here, you're likely with a carrier that really doesn't want your business anymore. And so it's a good time to shop around. So this is a good way to do kind of a sanity check on what you're paying. Is this in the right ballpark? Is it fair? And one of the things that really surprises people, in all the analysis we've done, we've figured that we've learned that the disparity in price for car insurance is much more broad than most consumer industries. So whether you're buying paper napkins or ketchup or bread, there's a fairly tight distribution of price most of the time. Car insurance, we'll see cases where a single company, but with different names underneath that one company, so you don't necessarily know it's actually the same company, there could be a difference of 5x for your exact situation. So let's say you have no tickets, perfect driving record, been driving for 20 years, driving the same car, living in the same place. It might be $1,000 with one company, and might be $5,000, but those two companies may actually be the same. They may be under that same corporate umbrella. And so this is the idea here with this tool, is to let people start to figure out what's right for me, what should I be paying? Because a lot of times, and I'll tell you the reason why I started to develop this particular tool, when my daughter turned 16, the price went up on all 3 cars. It's like, but she only drives one. We only let her drive one. It shouldn't go up on all 3. And my agent said, well, that's just the way it is. I thought, well, I don't think I believe that. So I'm going to go do the research and build a calculator. And in the end, what I found out was that we were actually paying about $1,000 too much. Went out and shopped it in the market, and the numbers were the same. So it was actually a very reliable tool. Now in Massachusetts, it's one of only 6 states where credit score isn't used. So you can just leave it blank or you can fill it in. One of the things that we do is at the end of this, if you want help with your insurance, we will introduce you to someone that can help. They may be looking for that information, but it's completely optional whether you put that in or not. The make of the vehicle has an effect on the price. I'm going to choose something that is just high on the list here and relatively common. And we'll say 6 years old, something like that. The value of that car, I mean, how much it's actually worth, doesn't have that big of an impact on price. And we can get into that a little bit more on why that is. So you don't have to have that number exact in order to really get a good estimate of what this costs. Okay, so now we're at the first screen where we start to get into how things might change because of the pandemic. It used to be, on average, most people commute about 16 miles to work. That's kind of the typical driving scenario, a little bit more than 15. That increases your price. So if we look back and forth between those upper numbers and this, it's going to add around between 5 and 10% to be commuting like that. But now another way of living now because of the pandemic is a lot of times your use is just for pleasure. Most companies, you can just call them up and say, I no longer commute. I'm now using my vehicle for pleasure. And you should get between 5 and 10% off, something like that, just by making that call. Some companies, now some will resist it. Some companies will also take your word on how much you drive. And that can have an even bigger impact. Now, we know that sometimes companies don't want to take this from people, that they don't necessarily trust the input that they're getting. And I've tested this. I've had friends that are with a variety of different companies go out and call them and say, I've changed my driving. And sometimes the agent will say, sorry, we don't accept that as input, when I know they do, because I've looked at the regulatory filings. I know they do. So sometimes the companies will push back on this and try not to give you the discounts. But it can be a pretty sizable discount. So that's another potential for saving some money as well. Now that the technology is getting a little more advanced, some companies are going to want you to put a device in your car that actually measures how much you drive. So that may be another way to deal with that particular issue. Now, those two items that I talked about there in terms of being able to save money based on the pandemic, they're generally pretty straightforward, but they're only going to come to, let's say, 10%. You know, if you're paying $1,000 a year, you're going to save $100. It's not, it's you know, not nothing, but it's not something that really you can do too much with. When we get to this page, this is where things can really start to change, because of the way, let's say in particular, if it's a 2 or 3 car family where there are multiple vehicles and 1 or more people are no longer commuting, which is very common now, and I think will probably still be common after the pandemic is over, because there is a lot of interest and a lot of infrastructure in place for people to be able to work from home. So there's kind of a new way of using our vehicles to some degree, more in the form of pleasure than commuting. What we can do is change the coverage. I'm going to show that to you, but I'm going to do that on the second vehicle because it's more likely to apply there. So for right now, you can choose the amount of coverage that you want to have. Let's go with 100,000 per person if you cause an accident, or 300,000 per accident. We also have, by the way, videos that the Shrewsbury Library has access to that include worksheets. So if you want to look for yourself how to do the calculations of what these liability numbers should be, you can do it yourself. It's very simple. It's not hard at all. But what you may want to do if you're not driving very much, the chance of a collision is low. So maybe you increase your deductible for collision. So if you cause an accident, you have to pay a little bit more, but the probability of it's down because you're not driving. If the car's parked a lot, maybe you actually reduce the deductible for comprehensive, because comprehensive is if a tree lands on your car or something like that. Maybe it's parked in the driveway all the time and you think the risk of that went up. And you know, those are just some examples of things that you can change that, again, have an effect on the overall price. And now there's discounts. Most all companies offer these as discounts. We'll check them all. these, if anybody's outside of Massachusetts, the discounts generally are a little bit different in other states, but this is what applies to Massachusetts. If you own multiple vehicles and you insure them through the same company, that's important, you can get a discount. So generally when you have multiple vehicles, you don't want to insure them through different companies. We'll say two, and you can see what that discount was. I didn't notice what it was before, but you can see all this as we go. You probably notice the numbers up here are changing with each piece of data that we enter. Enter who your current company is, how long you've been with them, and then we ask if you own a home. If you own a home, again, you want to insure it through the same company. So you want to be with a good company. That's going to bring another discount. So you'll watch here as we say yes for through the same company, 330 and 141 and 35 go down to 297, 121 and 32. So about a 10% savings again on that. So these savings keep stacking up. If you have the safety features, if you're not driving much, if you're insuring things through the same company, you can actually get pretty reasonable insurance prices. And part of the reason they give discounts as you bring them more businesses, the data shows the more business you give to a single company, the less likely you are to change, the more likely you are to stay with them for a longer period of time. And so that reduces their customer acquisition costs. So there's actually savings there for them as well. So now we see, here's the overall summary with all those discounts of what the car insurance price should be. Let's add another driver and another vehicle and look at that scenario where we're not driving as much. So new driver's name, I'll just put in Sally, and we'll say same age and same driving experience, started at the same time, and also say married. This second driver is very easy because we have a lot of the information already. And so we can go through this pretty quickly. Let's put a Audi on here, I guess. So something a little bit different. Four-door, say it's a newer car, and the value is a little bit higher. I have no idea what the value of an Audi is, but there's an estimate. Okay, so again, we're back to this page of, are we commuting or are we driving for pleasure? Maybe we're commuting a shorter distance or not as often. Commuting generally is considered 3 days a week or more. So if you're working from home 3 days a week or more, that's not generally considered commuting. So we'll put low mileage on there. Now, what we can do in this case is we can actually park a vehicle. And so one vehicle wouldn't need the full liability and the comprehensive and the collision. Now, again, this comes down to who your insurance company is. Not all insurance companies, not all agents will do this. Some agents, I've talked to lots of agents about this, just kind of testing them to see what they'll do. Some agents take two agents in the same state. One will say, I can't do that because car insurance is required by law. Another agent will say, it's no problem, but you have to maintain comprehensive. And so what comprehensive does is, because it's the least expensive, as you look here, $72 in this case for comprehensive. If you didn't have the liability and the collision, you're saving about $500, a little bit more, $560. But what that agent is doing by working with you on this is keeping the vehicle insured so that there isn't a total loss of insurance. If the vehicle is not insured at all, when you go back to renew it, you might get into a situation where you have to pay a higher rate, and you don't want to do that. And plus, while it's parked, in case something happens to it, you would want to make sure it's protected anyway. So, this has been, as I've told people about this as a way to save money, I've had media people say, I'm not sure I believe that, I'm going to go test it. And they've gone and tested it and found the exact same thing I have. Some people will say, yes, I'll do it. And others will say, no, I won't do it. So it really depends on who you're working with. But if you need the savings, on average, we saw that $1,200 a car roughly on average in the state of Massachusetts for car insurance. And if you can take $1,000 of that or $1,100 of that and save it on a vehicle that you're not driving, that's really a significant amount of money. So it can be worthwhile to do. By the way, I didn't point out this list of stuff, this text on the side here talks through all of this. So if you want to come back and do this later on your own, as you read this, it'll say on the, like here, number 3, on the insurance coverage screen, select your current deductible. It'll talk you through where you can find savings so that you know exactly where to look when you come back and do this later. I'm going to click all the discounts again. And so let's say finish. Let's say, okay, now what's the end result of this? So the end result is we show the price per vehicle. We break it out on on the different types of insurance. And now, so now if you went back and did it again and took either one of these vehicles, and another thing you can do is if you're trying to save some money, consider parking the more expensive vehicle, not the less expensive one, and drive the less expensive one. But the one you park, make sure you put a note on the steering wheel or something that says before driving it, reinstate your insurance, because if you don't, you could be in real big trouble. So let me just stop there. I've been through the whole calculator for 2 cars now. I've kind of covered most of the content. I want to see if there's any interactive items that you guys would like to cover. Anything in particular you have questions about on this? Okay. Let me also show you on this same page, we have frequently asked questions about insurance in Massachusetts. We list who the 5 best companies are. So we grade, we're very unique in what we do. We collect a lot of information from a wide variety of sources, all very reliable information that's been through, been submitted to state departments of insurance, like the Massachusetts Department of Insurance. And we grade every single company in every single state where they do business on the value that they provide, how well they handle claims, and their overall service quality. So those are the items that we grade on. These are the 5 best for the state of Massachusetts. And then we provide a lot of information about the laws in Massachusetts as well. So you can read up on these, and if you have specific questions about that type of thing. If you also are a homeowner and you're interested in home insurance, we provide all that same information on the home side. So you can just change the word car to home, or you can go back to the navigation and go to home insurance calculator and then select Massachusetts again. So it's exactly, you get there exactly the same way as you do for car insurance. So here we have the same type of thing for homeowners. Now through the library, we've created a large number of videos. It's somewhere around 30 different videos that are mostly pretty short, 3 to 4 minutes typically, that talk through all of this. And so it shows somebody by stage of life, whether you're 16 to 24, 25 to 54, 55 plus, the kinds of things to take into consideration as you're buying insurance. We see a variety of things, and we really do tailor it. So let's take, for example, 16 to 24-year-olds. One of the key things on their mind is, maybe I don't want to drive yet. And so what happens if I decide to wait? Well, what happens if you decide to wait is, because that experience curve is very steep in the beginning, you're going to start that experience curve later. So if you don't drive while you're at home with your parents, where they might be paying the insurance bill for you, and start later, you're going to pay a much higher rate. So those are the kinds of things we do to tailor this to people and their situation. Also, so as we go into the 25 to 54-year-old, one of the things that happened to me, and I think happens to a lot of people, you choose a company early, and you choose that company because maybe your parents use them, maybe your friends use them, maybe the advertisements are good, whatever it happens to be. But you can outgrow those companies. Going with the lowest cost company in the 16 to 24-year-old age, when you start to build a family and you start to have assets, it's a different situation. I had no idea that I was with a company that was just flatly going to refuse to pay a claim that was a completely legitimate claim. I had no way of knowing that. But then, starting ValChoice, I found out that the information's out there. It's just hard to access, and it takes a lot of analysis to figure out what it is. So paying attention to when your scenario is changing and how to make good decisions about what to do next is really very important. We also provide ratings. And so both on auto and home, you can come here, you can fill in your state, you can choose any company that does business in that state, and we'll give you a rating, get as many free ratings as you want. So as people get into those situations of, I don't know if I'm with a really good company or not, we help them see how to address that. Again, this is all in the videos that the Shrewsbury Library has access to if you want more information about any of it. If you're interested in other states, then we list the best car insurance and best home insurance companies in every state. So you can go just to those if that's something that you're interested in. If you have a personal injury claim, we have a personal injury claim calculator so somebody can figure out what their claim might be worth. There's a lot of variables in something like that, but it's all there to give you kind of a baseline. As I went through that whole process, one of the things I learned out of that is there are fairly standard formulas that are out there, but nobody will tell you what the answer is. Even when you hire an attorney, they still won't tell you the answer. So we're really trying to bring transparency to this so that it isn't such a mystery. It doesn't need to be such a mystery that confuses people on what to buy, and they end up going with, you know, whoever they hear advertisements from on TV. And so addressing that point, the advertising piece, generally when people ask me who are the best insurance companies, I'll say it's not the ones that are the big advertisers. It's the best companies, as you saw on that Massachusetts page. They're largely smaller companies that tend to be more regional. They tend not to be spending their money on ads. They tend to be spending their money on doing a better job for the consumer. That's really everything that I wanted to walk through today, unless there are specific questions that you'd like me to address. Oh, I see a comment. Sorry, I didn't notice. Hang on, let me get to that. Yeah. Oh, that was the zip code. All right. Thank you for the zip code. Was this helpful?
Yes, it was. Thank you, Dan.
Good. Thank you, Bindu. I hope that this works for you and is helpful to everybody here and anyone else that may access it later.
I was really excited about this program because I myself was in this dilemma because our cars are parked in the garage and I wanted to reach out to my insurance. They didn't do too much for me. So now that I have this tool, I'm going to work on it and see and go back and talk to them about it.
Yeah, some of them will just flatly refuse to do anything, but there are others that won't. I actually had one insurance company get extremely angry with me for telling consumers about this type of savings that they can get. They wouldn't deny that they wouldn't do it. They just didn't want their customers to be asking for it.
So I myself did not get too many answers. They did want me to use a device so that they can really track how much I'm driving. We
Yep.
have two cars and one is just parked, so I wanted to figure that out.
Yep.
And so I'm nowhere. I'm where I was. So this would help. Thank you.
The longer you stay where you were, the longer they've been collecting more money. Yeah.
Yes, exactly.
Yeah. Yep.
This was very helpful, Dan. Thank you very much.
Oh, good.
Very
I'm glad.
confusing for me.
What's that?
It's been very confusing for me, and so I have to rely on my agents. Currently, my agent is my sister, but it's hard to know because there's so much information out there, so much advertising, so many variables that it's really hard to know what is best. So thank you.
It is very hard to know. It really is. Yeah. And yeah, as we created that grading system, feel free to just, by the way, I should tell you one other thing here. Whoops. Let me go to, so we have this free car insurance rating. Now, if you go to the premium report, there's actually a price on it. And we're kind of gradually going away from charging for things. But if you share on Facebook that you're going to be getting this report, that $9.95 goes to zero. And you can you can do that too. And then we'll show you claims handling score, service score, everything. And we've taken the results of our analysis that I started this in 2013 and announced the rating engine in 2015. It took us 2 calendar years and a lot more man years to develop it. And then I took it out to a lot of senior execs in insurance companies and hundreds of agents. And in almost every single case, they said, you absolutely nailed it. That's exactly how these companies perform. So this really does work. And it's, you know, it's mostly free so that you can get the information that you need. All right, good. Well, I'm really glad this was helpful for you. Feel free to reach out to me if there are any questions that come up afterwards that you'd like my input on.
Thank you very much.
Okay, thank you. Everybody have a great evening.
You too. Thank you.
Okay, bye.
Thank you. Bye.